Adab, my honorable teachers. Before starting my presentation, I would like to introduce myself. Myself is Uday Das. The last three digits of my student ID known is 160. So today, my presentation topic is the overview of last monetary policy of Bangladesh Bank. Today I will discuss about the provide a summary of the monetary policy and the mentioned significant changes compared to the last policy and what are the tools used by the Bangladesh Bank. And last I will suggest some policy to reform needed from our understanding. Now I'll talk about the introduction of monetary policy. Monetary policy is the process by which a country's central bank like Bangladesh Bank, Federal Reserve Bank, and the Federal Reserve Bank of India manage the supply of money, credit, and interest rate in the economy to achieve specific goals. Now I'll discuss about the last monetary policy by Bangladesh Bank. The first is the policy report remain at the 10% unchanged for the first half of the YF 2025 and 2026, July to December 2025. And second is the understanding standing lending facility SLF rate held at the 11.5%, and third is the standing deposit facility the SDF rate reduced by 15 basis point in mid July to 808% effective from July 15 2025. And the last is the private credit growth target cut to 7.2% from the previous 9.8% to slow landing and control inflation. Control inflation. Now I'll discuss about the significant changes compared to the last policy. And the first of all is the repo rate. Repo rate in 2025 was 10%. Also, 2026 it will remain at the 10%. No change yet. And the second is the private sector credit target. The FY. The FY 2025 it has 8.9.8%, but in FY 2026 reducing significantly to 2.7.2%. The third is the SDF rate. The SDF rate is the YF 2025 8.5%. No specific previously, but in the YF 2026 it is lowered to 8%. And the fourth is the SLF rate. SFL rate in FY 2025 was 11.5%, and also FY 2026 is remain unchanged at 10%. 11.5%. And the inflation trend targeting 7.8% by end of the June, and FY 2026 is still above targeting, requiring continue to listen. Now I will discuss about the tools used by the Bangladesh Bank. First of all, the tool used by Bangladesh Bank. First of all, Bangladesh Bank used the repo rate. Repo rate at the rate which Bangladesh Bank lent money from commercial bank for the short time. If the repo goes up, borrowing is costly and less money is market and inflation down. The second is the reverse repo rate. The reverse repo rate at which Bangladesh Bank take money back from bank commercial bank and given them interest we used when bank have an extra money. The third is the policy rate. The policy general the policy rate is a general term for the main interest rate set by the Bangladesh Bank. The repo is the main one. It guided all other interest rate in the economy like deposit rate and loan rate. The fourth is the cash reserve requirement. Cash reserve requirement or CRR. Bank must keep a fixed amount, fixed percentage of deposit has a cash with Bangladesh Bank. Example, if Bangladesh Bank if the CRR is a 4%, and the for every 100 taka deposit, bank must keep 4 taka in a Bangladesh bank. The fourth is statutory liquidity. by SLR. Bank must keep another portion of deposit in form of government approved securities like the treasury bill and bonds. It's different from CRR because CRR is only cash, but the SLR can be cash or plus bond. And the sixth number is standing lending facility. Standing lending facility is a short-term emergency loan from Bangladesh Bank to commercial bank, given when bank face a sudden shortage of money. The seventh is standing deposit facilities. The bank can keep extra money from Bangladesh Bank and earn interest, help Bangladesh Bank absorb excess liquidity from the system. The eight number tool the used by Bangladesh Bank is open market operation. Open market operation is open market operation which Bangladesh Bank buy and sell government securities, bond, treasury bond in the market. If Bangladesh Bank buy securities, money goes into market, more liquidity. And the number nine tool used by Bangladesh Bank is bank rate. The rate which Bangladesh Bank give long-term loan to commercial bank or financial institution, not used as frequently as repo, but it influence overall lending rate in the economy. The higher bank rate, expensive borrowing, credit should lower bank rate, and the cheaper borrowing and credit expanded. Now I'll give some suggest policy to reform the Bangladesh Bank monetary policy. The first of all, the first my suggestion is enrich transmission mechanism. The further promoted digital banking and transparent interbank market to speed rate and changes to the real economy. The second is change the FX reserve build up, develop the hygienic farm work and improve export competitiveness to reduce dependency on external borrowing. The third, deepen financial sector resilience, ramp up macro potential overnight, address non-performing loan and boost capital adequacy and aligning with financial stability assessment. The fourth is it is fiscal and monetary policy. Prioritize growth, enriching yet prudent spending in the fiscal budget to reduce the borrowing pressure, assist inflation suppression, and augment structural reform continue. The liberalizing interest and exchange rate regimes, simplify bank consolidation and government's farmer to attack investment and strengthen banking efficiency. Thank you, my honorable teacher. That's all my side.